All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen, Monday, the 3rd of November, 2025. Welcome, everybody, to a new month, the pre-last month of the year. So, yes, time has flown very quickly. So, look, we're going to look at the markets. We're going to see what's happening this week because, again, it could be an interesting one. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. so, yeah. Like I said, it's a new month, it's a new start, it is another busy week ahead of us. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So what I'm talking about basically, I wanted to quickly pick up on the key important events this week because look, one thing for sure is we're in the jobs week, right? The U.S. jobs week. So normally we should be getting all three job metrics: the JOLTS, the ADP, and the NFP. But because we have a government shutdown still, so the government is on holiday, continues to remain on holiday. Basically we are struggling. We are struggling, and I think that the further this goes, the more questionable the data becomes. The one that which is produced by the Bureau of Labor and Statistics, and the U.S. Bureau of Labor and Statistics. Because look, I mean, come on. I mean, okay, it will require time until all the adjustments will happen. But at the moment, after last week's interest rate decision by the Fed, I mean, it was really sad to see in a way that that the guys in there, they're so focused on supporting the labor market with their interest rate cuts, but they're not getting the kind of the main job numbers because the government is in shutdown. So they kind of they look at the inflation number, although they said themselves that at the moment the inflation number is kind of on the second stage for them. Like it's the second more important number. It's the labor numbers which are the more important ones right now for them. So, and like I said, it's really weird to say that that they're making these decisions based on kind of on just maybe whatever they feel like. Look, for now, I mean, we know that, like I said, looking at the economic calendar, we are, at the moment it's sitting here that we are expecting the NFP non-farm payrolls to come out, but also the previous months as well, sitting here on the calendar. Look, I don't know if it's going to happen or not. Everything can change very quickly. But one thing for sure, let's keep an eye on the JOLTS. So JOLTS job openings are coming out. At the moment, I don't see a forecast here, but let me refresh the page. Maybe something has shown up here. So that's Monday. That's there we go. That's Tuesday, and where are those JOLTS? There we go. So yeah, we don't have a number yet, but again, in general, if we launch the chart just to have a look at the trajectory, well, the trajectory is actually the same as ADPs and NFPs, and this is what I'm seeing right now. So look, we have been on a critical decline, to be honest, since the pandemic and since kind of this is the 2022 moment when the conflict in Ukraine started. We started seeing this decline, and it just continues to drift lower. Look, if I would be looking at this chart from the technical analysis perspective, then I have my 200-day EMA here, which is kind of my last little support level. If we do drop below that, then to me that becomes a little bit more critical, even actually not even critical, but scary a little bit. Let's put it this way, scary. And the fact that the trend remains to the downside in a way here, and we're saying that it's not really picking up. We're struggling to push back above the highs of this year here, which are around 7.75, something like that level. Again, if we somehow jump back above it, then okay, maybe no, the market is saved and hooray. But to be honest, I think that with all the AI transition that we're seeing, big companies saving money on saving money on how to say it, on their costs. They're cutting costs in a way, and we all understand. What does that mean? That means they're cutting jobs. We saw Amazon announcing, we saw Nestle announcing, a bunch of other companies also announcing. Yes, great for the stock, for the shareholders, not very great for the people. So, but the usual. Anyway, look, long story short, for now, of course, we're going to watch the jolts. At the moment, like I said, we don't have a forecast, but let's say if it comes out below the previous number, then, well, it's kind of pretty much self-explanatory. ADP, now this one's an interesting one because this is what I'm going to be watching very carefully on Wednesday. ADP is the number, well, probably the, if it used to be NFP, then and ADP, and then JOLTS, now it somehow becomes ADP is on the top, and NFP is like somewhere out there, and then JOLTS. So ADP took the first spot in terms of importance, and the moment what we're expecting here is a positive number. But the problem is that look at this number, 24K. This is the chart. So look, 24K, that's in a way nothing. That's in a way nothing, because we were at levels like even back here in July at 100, 100K. But the 100K was even a bad number. It was, before that, the year before that, we were like just examining 200s, but even then it was bad, because the year before that we had even higher numbers. At one point we even had like a 500K jobs created. So what I'm saying is that, again, another problem here is that we are seeing a clear direction, right? And for me, another big problem is that we have, let me just adjust this very quickly. Coordinates, I want to put this 0. There we go. Now, this is my problem. We have been in negative territory this year 3 times already. I mean, look, I get it. Maybe ADP is less credible. However, it's the best thing that we have right now. So, don't get me wrong. I don't want to, I don't want to sound very pessimistic, although probably already kind of you thought that I am. But for sure, it's something to worry about, because yes, great, all these big stocks and Nvidias, all the Magnificent Sevens, are enjoying their rallies, making their big deals. Palantirs and your other big companies are enjoying the profits and everything. But then again, you're kind of creating the elite which will control everything, and basically you create a lot more poor people. Great, wonderful, very nice economy. So what I'm saying is that, like, for now, you need to be very careful. Look, the stock market, yes, it's rallying. It's totally ignoring the labor market. Although the Fed keeps on talking about the labor market, that maybe it's the only entity that is kind of thinking about the labor market right now, because nobody's thinking about it. Everybody's more thinking about, like, how to integrate AI. Look, I'm not against AI. It's great. It's wonderful. It's a wonderful tool. Could be. We still need to understand how can we actually, feel the results from all those investments that the companies are making, for all that money, the capital expenditure that everybody's doing as major capital expenditure. When you're getting like institutional banks, investing into, but then they slow down because they understand. Then you got your corporate bonds are not enough. Then you go into private equity. When you start getting into private equity, that's already like, oof. Anyway, Long story short, for now, if I'm looking at the charts, and let me just jump into that, I can see that the stock market, I mean, look at this. October, it was a fantastic month. I'm not talking about even Japan. I mean, this candle this is a monthly chart, and this is a move on Nikkei. Wow. I mean, look at this. Has been a historic move and a hyperbolic move. And I mean, honestly, whatever comes up must come down. We saw something similar in gold, right? I mean, where's that gold? And it corrected back down. So look at this. We also saw a hyperbolic move. Everybody was crazy. Everybody's going like, oh no, 4,500. Okay, you know what? Let's talk 5,000. But that's what I'm saying. When something becomes really overvalued, are you sure you're going to keep on buying this? I think you're going to search for value somewhere else. Now, what I've talked about in my previous webinars here on Top News, about like 3 weeks ago, actually, I started releasing some videos where I'm talking about DXY, the US dollar index. And the US dollar index is looking at that one right now, this is still a monthly chart, and let me just jump into a daily. This is enjoying a moment, and it quietly is enjoying the moment. And it seems like it's slowly kind of picking up its safe haven status. Now, look, do I believe that this is going to rally like strongly to the upside? At this point, probably not, because I think that we still have a little bit of room to the upside. However, I think that the White House administration needs the cheaper dollar, and they're gonna just kill it after maybe after the holidays, or maybe pre-holidays or something. When people will stop buying presents or traveling for holidays, and basically so that. At the moment, everybody needs to feel that that the dollar is kind of the U.S. consumer needs to feel that their buck can go further, and yeah. And after that, after we are done with the holiday season, maybe again, like I said, that's theory, that's an idea. Maybe I'm wrong, maybe I'm right, but you can always let me know in the comments. Feel free to honestly comment on this crazy theory. But certainly, yes, we're keeping an eye on this. For now, like I said, DXY is picking up interest because, well, let's face it. I mean, the stock market understands that how much more you can buy Nvidia. Yes, it probably will go further at some point, right? All your Okay, Meta is a different story. These guys kind of got caught in a way on that this whole AI is a little bit of a problem. But this company as well. This company is just crazy over. I wouldn't say overvalued, no, but it's like this move here on Palantir. Come on. I mean, look at this is a monthly chart, ladies and gentlemen. Yes, at one point a long time ago we were around like $25, $30, and it was a great investment. So congratulations to those who held on this one. But we do understand where a lot of profits are coming from as well. These guys are also heavily involved with providing intelligence to one of the countries that is currently bombing a small little group of people in the Middle East. So yes, so this is kind of understandable. And this, like I said, and wherever there's war, there's profit, as always. We know that. We know by Lockheed Martin, we know these guys are also doing great, or especially this one right here. This one right there, there we go. Fantastic company which benefited from the conflict in Ukraine. And I mean, look at this. I mean, boom, goes off here, and from like around $100 to all the way to 2,000. Hey, call it a coincidence. But anyway, certainly, like I said, what we're watching here, what we're very carefully watching this week is also the Wednesday's Supreme Court of the United States, SCOTUS, its announcement in terms of tariffs, or if the White House tariffs were initially lawful or not lawful. So they will, give the decision. But even if, from what I kind of heard, even if they're gonna say that, the tariffs were unlawful, not that it's not gonna to be honest, it's not really going to affect much in terms of removing those tariffs because, yes, it will change potentially could change the strategy of the White House administration, but are we going to see those tariffs getting removed straight away? No. So that's what I'm saying. So be careful. Like I said, for now, I mean, if the only thing is the way I'm thinking that the markets could react to the announcement of the SCOTUS, Supreme Court of the United States. If we do see like a ruling like that, that the tariffs were unlawful, I think that we could potentially see a little bit of a setback in the stock market, just because maybe it could see that the current stance, what we saw when the stock market was rallying, even with the tariffs, it was all kind of false in a way. So that's what I'm saying. So it's kind of the image. It's the image side, and I think that, like I said, that's where the interesting play could happen. Anyway, again, theory. Let's see what's going to happen, ladies and gentlemen. I hope you found this useful. Look, there is, of course, a lot of things happening on the US dollar side for now, especially looking at also the currencies. The currencies are quite interesting right now, especially the pairs where the US dollar is the base currency, like USD CHF. Look at this. I talked about the USD CHF recently in one of my Markets Talk webinars. Actually, almost all the time I talk in there about these pairs like these. USD CHF, there we go, clearing the downside line, going for this 0.8076. Then USD JPY right now could still continue pushing higher. Japanese need a cheaper yen, and to be honest, we can see that the yen could continue devaluating unless the stock market reverses south. Then automatically the Japanese yen could pick up interest, buying interest as basically being a safe haven. But until then, until we see a reversal in the stock market, we're going to see the Japanese yen devaluating unless the BOJ steps in with an interest rate hike, which they were supposed to do at the end of October, but they changed their mind because the new leader, the new prime minister came in the middle of October, and basically that prime minister is in favor of cuts, lower interest rates, and they basically met at the middle, between the new prime minister and the BOJ. They said, okay, we want to hike, we want to cut, let's not do anything, all right? Let's meet in the middle. There we go. So yeah, like I said, unless we're going to see a hike from the BOJ, I don't think that nothing else apart from the market turnaround to the downside could strengthen the Japanese yen. So, ladies and gentlemen, let me know in the comments what you think. I mean, like I said, it's a lot to take in, maybe, but I just wanted to share my little views here on the market right now. Again, like I said, this week, be careful because we could be in for a ride again, like every week. But certainly, yes, it could be an interesting one because at the moment everything is at all-time highs. Look at the Google's like these guys are all-time high. AMD, by the way, AMD reporting earnings. So look at this. These stocks. I mean, this is just wow. To the moon. And eventually they will have to correct lower, don't get me wrong, but we're just waiting for the moment. Ladies and gentlemen, thank you very much for watching and listening. I really hope you found it useful. And as always, stay safe, have your stop losses in place, risk only what you can afford to lose. Don't overtrade and everything will be fine. And I shall see you next time in my next little video update. Bye for now.